Welcome back to the Crypto Trends Podcast, where we cover all things cryptocurrency, blockchain, Web 3.0, and AI. I'm Robert Croak, and I am joined by my co-host, Armando Pantoja. Both of us and our amazing team are excited to bring you the best information, guidance, and strategies each and every Wednesday. So follow along and always remember to take notes and take action. So Armando, take us into talking point number one, Bitcoin market dynamics.
Yeah, so Bitcoin is actually down to around $60,000 today. I got a lot of messages. I'm sure you have people panicking, not understanding what's happening. So hopefully we can shed a little bit more light on the subject. Now, Grayscale, there's big news out today. Grayscale transferred approximately $250 million worth of Bitcoin to Coinbase. So a lot of people saw that on the chain and they panicked. That's one reason, right? It's probably likely for open market sales. It's coincided with this market dip. And Bitcoin, like we said, is right around 60,000 at 18% decline from the most recent highs. So one thing that happened that a lot of people don't realize is that Hong Kong debuted the Ethereum ETF. It was a lackluster opening, and a lot of people use this as a fear factor, and they panicked and start selling Bitcoin as well.
Yeah, I look at it this way. Let's touch on Hong Kong. They expected $100 million inflow into the markets on day one, and they only had $11 million approximately. So this is huge. 1/10 of the amount of volume that they expected in day one volume. So that's a big, scary thing for everyone in the markets. Conversely, Cathie Woods made a bold statement, and she raised her estimate on Bitcoin to $3.8 million by 2030. So let's break this down a little bit by the numbers. That would mean that with great adoption, institutional investors would have to allocate at least 5% of their portfolios to Bitcoin to reach that number. And this is a pretty optimistic scenario. So even with great adoption, it's pretty much a long shot. But I love that she's putting those big numbers out there, because the more people like Cathie Woods and Michael Saylor talk about the great future of Bitcoin, I think the less scary it becomes for the kind of retail investors that always have these knee-jerk reactions.
Yeah, I can see it reaching that number eventually. 5%. Most people have cash in their portfolios. 10 to 20% is normally what people will suggest for you to keep. 10 to 20% of your portfolio in cash. So even if at 1/4 of that, Bitcoin will be at 5%. I think that's reachable eventually. I don't know when. Maybe in 5, 10, maybe even 20 years. But I think we can get to that number.
Yeah, I love to see these kind of lofty expectations, but I don't see it happening by 2030. That'd be really tough, even with the 2028 halving coming through. But let's go into talking point number 2, Ethereum's market and regulatory updates.
So Ethereum's price dropped below $3,000, and it was due to that lukewarm debut of the Ethereum ETF.
Yep.
Now, what people don't realize, and a lot of people, because of that, I've gotten a lot of DMs, I'm sure you have, people panicking. Well, you said that Ethereum's ETF would cause a lot of retail investment interest into the market. Yeah, that's still true, because if you look back at Bitcoin's ETF, when it was dropped earlier this year, 2 weeks after that was dropped, Bitcoin fell 16%. And then what happened is that investors, the banks, the rich and the elite, they know how to play the market. They know that people are expecting a sell to news event. So they play it as well. And hopefully they can sell and buy it back once the sell to news event hits, cause those bottoms to come in, and then buy it back, anticipating that new interest of retail involvement and make money as on the way back up.
Yeah, I mean, how many years have we watched this dance? I feel like I've only known you a year and a half, but I feel like you and I were in alternate universes doing the same thing 10 years ago. It goes up, there's a news cycle, it goes down and back up. Everyone listening and watching the Crypto Trends podcast right now, chill out. When in doubt, zoom out. relax. At the end of the day, if you believe one Bitcoin is going to be 100,000, 200,000, 500,000, a million, whatever it is you believe, stop worrying about these short-term cycles and reactive markets, because at the end of the day, that is how the rich and the elite and the banks shake out the retail investor like you. They want to put fear into you so they can cause a market correction and they can get in for a cheaper entry point. It's all manipulation. It's all good for the long-term markets. You just have to learn to not have knee-jerk reactions. But also with this talking point, the China AMC Ethereum ETFs, with the recent launch in Hong Kong, that offers unique features like spot and physical subscriptions and redemptions, setting a new precedent to the market. A lot of this is good news if you can just look at it from an outside lens and not focus on the minutia. You'll find that so much news is happening right now that is really great news for long-term adoption and price action, as long as you can see through it and look at the macro understandings of the market.
And especially with this Bitcoin halving that took place a week or 2 weeks ago, all of these things are happening in accord with one another. And it's going to cause a lot of retail involvement once we are, once all of these small, volatility is shaken out of the market. It's going to cause a lot of new interest in Bitcoin. Remember what we said before is that the Bitcoin halving, there's normally a 4 to 7 month delay after that event happens before we see that large exponential growth.
Yeah, that's one of the things that kind of bothers me the most of the last, let's call it 2-3 weeks during this market correction, is that we're spelling it all out for everyone, yet our phone still melts off of the table as soon as there's a correction. And if everyone could just flip their mindset to understand these corrections give them a better entry point, then they should be in a better spot and not be so scared and afraid and having these knee-jerk reactions. If you don't have the stomach for these corrections and volatility, you should probably take up underwater basket weaving because you need something less stressful. Because at the end of the day, we and the people that do listen are going to make the greatest increases in our wealth in history in our lifetimes by knowing what to do in these market conditions. And all of you can follow suit as long as you listen. Okay, and to announce our winner from last week's episode, Becoming Bev is the winner of the Propy prize. So whether you're a real estate professional looking to modernize your practice or a buyer-seller eager to navigate the market with the latest technology, Propy offers an unparalleled platform that simplifies, secures, and revolutionizes real estate transactions. Get ahead of the curve and explore how Propy can transform your real estate experience today. For more information, go to propy.com. And for the side hustle no one is still not talking about, go to propykeys.com and learn how to mint properties and landmarks on the blockchain. So let's go into talking point number 3. We've been talking about tokenization a lot and its impact on investments. Break it down a little further, because everyone, the big buzzword right now is real world assets and tokenization. We see BlackRock with their new fund. We see everything happening with Propy in tokenization and real world assets. So break it down a little bit so people can understand what this means.
Yeah, I just got off a virtual panel on Benzinga. We were talking about real world assets. That's what the whole hour, 2 hours is about. And one of the things that really stood out to me is that I didn't really know this, is that a lot of the high wealth individuals all over the world are getting into this right now, right? Is because they see what the potential of tokenizing real world assets. And you know what really stood out to me is specifically with art, wine, and precious metals. Those are the 3 that they're really invested in. And right, a lot of people would see that as being frivolous. So these are not traditional ways that we look into investments. But what they see is that tokenization of those assets that were once restricted from people that didn't have high net worths are now going to be available to those people. And it's going to cause a new influx of participants in the market. And that's going to cause the prices to go higher than they've ever went before. So things like precious metals, art, which, remember, art is the value of art is restricted because only so many people on earth can buy it. If you have a $2 million Rembrandt, I don't know what the prices are, $5-10 million, Monet or whatever. Only certain people can buy it or even have access to even buy it. Right? So with tokenization, you're allowing the entire world access to these investments, which are going to drive prices up to where they've never been before and allow more market participants to be able to take advantage.
Yeah, let me touch on that because we did talk about that this weekend. And when I look at my portfolio in 2023, I did really well with VinoVest, investing in wine and whiskey. Also with Masterworks, investing fractionally in these big paintings. Because like you said, that a lot of people don't understand with real world assets and tokenization, it's no longer going to be just for the ultra wealthy to be able to invest in these $10 and $20 million paintings, $100 million paintings, because with fractional ownership, you will be able to invest just a tiny bit to be able to have these upside potential of these high ROIs in some of these alternative investment categories. That's what I love about it. It's happening throughout everything, even classic cars. We talked about wine and whiskey, art, everything. So it's just really about fractional ownership, leveling the playing field for the everyday investor that doesn't have millions of dollars. And I love it. And the fact that companies like BlackRock, Franklin Templeton, Wisdom Tree are all introducing these different types of products, it's going to be so important in the coming 2 to 5 years for the little guy. You know me, I'm always fighting for the little guy. I was once a little guy and nobody wanted to help me. And so I love real world assets and tokenization because of that.
And just imagine the potential of increasing liquidity for these types of things. Imagine if you have $100 million painting, in the past, who are you going to sell it to?
Right.
It's probably like 5 or 10, maybe even 20 people in the world that one have the capital and two are interested enough to buy it. Yeah. So now it increases that net of people who are able to buy exponentially. And this is what I like about it. It's a new term that's being bounced around in crypto circles, TradFi. And it's called traditional finance. You're moving those traditional finance products and services onto the blockchain. Yep. And that's debt, that's funds, that's equities. A lot of new things, a lot of old things are now being brought to new blockchain. And it's going to increase, it's going to be a big opportunity to make a lot of money for people who see the opportunity on the horizon.
Yeah, and if you think about it from a real estate perspective, so many people, when they're buying real estate, don't consider how illiquid it is. And then all of a sudden, when you start doing it on the blockchain and you have your tokens and you have liquidity through NFTs and however you do it, it just makes it so much better for the everyday investor. And that's why I'm so excited moving forward for the Crypto Trends podcast in our community, is to really be able to get in on the big deals where the regular retail investor didn't have that ability 5 years ago. It's so, so important. So let's go into talking point number 4, the shift in Bitcoin ownership dynamics. I think this is an important category for everyone to understand, and it'll help them, I guess, prevent them from having the knee-jerk reactions by having a better understanding of what this means.
Large-scale whales are buying the dip right now, and small scales are reducing their holdings, which is what you really, really shouldn't do in a dip. You really should not do that. But like Robert said before, is that this is the eternal struggle that's happening in this industry and really in all investment. And it's one of the biggest reasons why the rich get richer, is because when things drop, when people panic, they see the opportunity, they execute, and once everything recovers or even goes past where it was before, they make they make a lot of money by being able to identify that opportunity, right? And this shift could lead to a more decentralized and even a more stable Bitcoin market.
Yeah, we joked about this a month or so ago, and I said, I wish we could take everyone out there and we could hold their passwords and not allow them to panic and have these sell-offs, because I get probably literally 20 to 30 messages a week where people say, man, I really wish I would have listened to you. The other day when Bitcoin dropped 5%, I sold everything. Now it's back up 15% and I got to get back in. And I'm like, yeah, and you forget that's a taxable event. So that's why I love every week being able to sit here with you, talk about the state of the markets, really dig into what we can do to help everyone understand from a long-term perspective of the best ways to prevail in up and down markets, because anyone can pick winners in bull markets, but all the wealth is made in bear markets. Please write that down and remember that, because it's so important that the rich get richer when everyone else panics and they can buy things on sale. Okay, Armando, I love this. So let's go right into the Q&A section. The audience loves it. We love it. And I'm going to take question number 1. Randy asked, how do I mint my personal address? This is a great question, Randy. You've been hearing us talk about Propy quite a bit. That's propy.com. But the key for minting here is propykeys.com. Just like car keys, propykeys.com. You will need to own the Propy Pro coin, and you will have to deposit a little bit of Ethereum for the gas fees. You literally go in, you follow the instructions. You can do it in like 7 minutes, get it done, and you can even do other addresses and landmarks. It doesn't just have to be your personal address. And this is a great long-term strategy to protect your asset, get it on the blockchain, and also get that NFT. And down the road, as there's more and more adoption of properties on the blockchain, this is going to be a great side hustle for people, similar to wholesaling real estate right now, where they can go mint other people's address with a contract and then be able to make money on that sale on the blockchain down the road if the property sells. So great question, Randy. And I think this is huge for the future. And you can check all of that out at propykeys.com.
Yeah, so question 2 is Gaza asked, how do you store ordinals? So I'm assuming she's referring to Bitcoin ordinals. Now, Bitcoin ordinals are attached to the lowest denomination of Bitcoin, the Satoshi. So it's not about the way it's stored, it's about the way it's read. Data is connected to each denomination of that Bitcoin. It's already in your wallet, and it's read a different way. So there's data that is attached to the lowest denomination. The lowest denomination is now representative of an NFT that's somewhere else. And when it's read from the blockchain in an app or a website, it can tell that you own that information that's attached to that data that's on each individual Satoshi in the Bitcoin wallet. So it's the same way as you store Bitcoin. It's just the data is read from your wallet a little bit differently.
I love it. Okay, question 3, our last question of this episode. Luke asks, what other projects are you diversifying into? Great question, Luke. There's not a lot of new that I'm looking at. I don't know about Armando. For me, it's still gaming, AI, decentralized science. So you've heard me talk about projects like Data Lake, the new ASI coin, which is the merger of Fetch AI, Ajax, and Ocean Protocol. That one is going to release in the next couple weeks in May, and I'm super excited for that coin in the AI space. Also, I really love Immutable X, Genomes DAO. The list is pretty long, but those are some of my favorite projects in my favorite sectors right now. So I want to thank each and every one of you for listening and following along. You can find us on Instagram at Crypto Trends Podcast and on Spotify, Apple, and YouTube. We're so excited for the markets moving forward in 2024. And remember, don't have those knee-jerk reactions. We're here to help. We're here to teach you and share all of our crypto insights with all of you. And if you love the podcast, please share with a friend. Give us that 5-star review, and we'll see you next week.